Enphase is one of the biggest solar stocks in the world, and it looks primed to benefit from Biden's infrastructure spending plan and all of the subsidies Biden will be implementing regarding solar technology. I'm the Max Invest YouTube channel, and if you enjoy the video, remember to like and subscribe, and remember nothing said in this video is financial advice, and you should always do your own research. So we'll start off by looking at the market opportunity that both Enphase and solar stocks have in general. Now, interest rates remain low currently, and it looks like they will remain low for a few more years, meaning all of these solar companies can borrow a lot of money very cheap to build their projects, and this should help. Solar investment has grown 10 times during the past decade, and it is finally starting to become financially viable for companies and individuals. The pace of coal plant shutdowns is constantly increasing, and this does look very good for solar stocks. Biden has also rejoined the Paris Climate Agreement when he became President of the United States. And Biden believes the future rests in renewable energy, so it does look like Joe Biden really does believe in solar stocks over the long term, and he will pump a lot of money into these solar stocks. Biden has a new infrastructure spending plan that's about $2 trillion, and this plan looks very good for solar stocks like Enphase, as it will increase the amount of infrastructure for solar energy, and it will provide incentives for consumers and businesses to use solar energy. Renewable energy mandates are already in multiple states, and this looks very good for Enphase. They do seem to have a big market opportunity now more than ever. Getting into Enphase as a specific company, Enphase is a solar energy company that designs and manufactures software-driven home energy solutions. What Enphase basically does is they put a small micro inverter under each solar panel on a roof. This is their main business, these micro inverters which Enphase will put under the solar panels. Micro inverters will help maximize power production, and they will connect the solar panels to the Enphase Enlighten app, allowing individuals to see how much solar they're using, their energy consumption, and how much this costs. Enphase was founded in 2006, so has been around for a while, but has only just begun to take off in share price with all of these new renewable energy incentives. It has 789 employees and a market cap of around 20 billion, so it is a pretty big company. Now, I do not understand too much about what a microinverter actually is on a technical level, as I do not have that much experience within this field. However, they do seem a lot better than the traditional string inverter. Enphase have said that semiconductor integration and the technology they've got behind microinverters make it far more efficient than what you would traditionally use with solar panels, giving them a big advantage over other helpers for solar panels. So it does look like Enphase are doing the right thing, and it appears that their service that they are providing has a lot of demand for it going into the future. Enphase has over 1.3 million systems in 130 countries, so as we can see, it is a pretty big company, and it has shipped over 30 million of these microinverters. Enphase is global, and it's working all over the globe, which is great for the company. It also has big partnerships with SunPower, Panasonic, and more. These are some pretty big names, so this is quite good for Enphase Energy. Enphase also has energy storage along with the microinverters. They call this energy storage Encharge, and it allows individuals to store their solar energy to use for later. So of course, you don't need the sun to be going the whole time. You can use your solar energy at night, which is obviously very necessary. Encharge accounted for 10% of Q3 sales. However, this is ever growing, and this does seem like a big part of their business. There is also the app, which I've talked about previously, and that is in charge of the energy storage and energy usage. So this does seem like quite an integral part of the business. Now, let's take a look at some of Enphase's financials. Enphase earned $774 million in 2020, being 24% growth year over year. This is some pretty high revenue, however, relative to the market cap, it is not that high. They have a current ratio of 1.74, which means they have a pretty solid balance sheet in the short term, and they are projected at $2.6 billion in revenue by 2024. So as we can see, this is a company that is predicted to rapidly grow with the use of solar constantly growing, as we've already established. This was their 2020 was their first full year of profitability, which is always good to see a company coming into profitability, and they have a manageable amount of debt. They have a PE ratio of 159, showing that they are quite a highly and richly valued company, probably due to their high projected revenue growth and Biden's new plans, and they have a short float of 3.77%, which means not that many people believe the stock is going to go down. That's a pretty standard short float. As we can see, their revenues have been increasing steadily and very well over the previous few years. However, the next few years are expected to be significantly bigger for the company. As we can see, the analysts believe that in 2021, they will be doing $1.34 billion in revenue, which is 73% sales growth. And then by 2022, this will be $1.8 billion. So we can see the analysts are very bullish on this company, and they know that all of these infrastructure projects Biden is doing are specifically designed to help Enphase, and this does show why it trades at such high multiples. The analysts believe that Enphase has a 47% upside by the end of the year. It's currently trading at $150, and they believe it can get to $220. It's already been up into the 200 range. However, it got sold off a little bit with the broader macroeconomic tech sell-off that has happened since February the 18th to around the end of March, and is still sort of happening going into April. So the analysts are pretty bullish on this stock overall, which is always a good sign. And even the low estimate is only 167, which is still upside for Enphase. Enphase believe they have a whole bunch of advantages to do with rapid shutdown ready for users, safety, and they believe they are low risk. Enphase also believe they have operational excellence. They believe they have good, high quality customer service and high quality products. Enphase only have a wait time of 30 seconds for their customers, and they believe their products are extremely high. They also believe they have a very good supply chain optimization, they have solid product innovation, and they believe their pricing for their products is pretty good. Enphase also say they have very good margin, and this is true. Enphase have been constantly improving their margin, and their margin, if I recall, is up at around 40%, which is extremely high, and they're making a lot of money due to their very high operational excellence. Enphase, compared to other companies in the same boat like SunPower, have way higher margin and are growing at a much more rapid rate, so this really is the leader in this space. Enphase has a management team that is very experienced in semiconductors. I've looked at their previous roles, and they all have 20 plus, 35 plus years in semiconductor manufacturing and other roles at SunPower and solar groups and solar companies, which is very good for the management team. I haven't yet looked into them too much, however. Enphase have also listed all of the potential risks that they may face. They say their business could suffer if COVID continues to go on into the near future, and that does look likely for 2022 in the US. They say the solar industry is rapidly changing, which makes it hard to predict outward, which is another one. Also, one of the things that they emphasized in multiple lines throughout their risk paper is that they have outside contract manufacturers. They need to rely on all of these manufacturers, and if these manufacturers happen to have a manufacturing problem that is not related to Enphase, well then Enphase will have a big disruption in their supply. They say they rely on concentrated manufacturers, and this could be problematic for the company's supply going into the future. They have said the solar industry is highly competitive, and we do know this with SunPower, Canadian Solar, Sunworks, and all of of the other companies, and they have also said that their expansion internationally is another big risk as it is very uncertain. However, I do see this as way more of a benefit than a risk, as we do want them to be expanding internationally for increased and improved revenue. They have also said as another risk, the reduction, elimination, or expiration of government subsidies could affect the share price. Obviously, this is true, and Biden has just introduced a whole bunch of subsidies. If, say, a Republican government comes in 4 more years into the US and takes away subsidies for solar, this could significantly hurt Enphase, as they are currently being supported by a whole bunch of subsidies. Now, Enphase's share price, as I've already said, has slumped the whole way down to 150, and in the short term, I do see around the 150 mark as a pretty good buying price for Enphase. However, this is not financial advice. Personally, I do not hold Enphase shares, as all shares are relative, and I see better opportunities elsewhere in stocks like Tesla and Amazon. However, Enphase is definitely on my watch list. I don't think this stock screams buy, and even at 150, it is trading at some very high multiples, so you will need to make your own decision on this stock, and I personally do not have the stock, but it's certainly interesting and I do like it. If you enjoyed the video, remember to like and subscribe, and type down anything that you thought about the video or about Enphase in the comments. Thanks for watching.